I am not a motivational speaker. You know, one thing about motivational speakers is you tend to feel better after the program. Here you're going to actually feel worse, and you'll realize how much you're overpaying, and I'm not exaggerating when I say that. I'm also not going to tell you a lot of jokes. We'll have fun, but that's not my focus. So if telling jokes is what's important to you, you might want to hang up. But I will promise you, if you stay on this hour, I'm going to put thousands in your pocket. It's going to be well worth it to you. And I want to start off with a question. Do you want to pay all the tax that you legally owe, or would you like to pay much more? You say you want to pay just what you legally owe, probably. But, you know, what if you are paying more? What if I can, in the next few minutes, absolutely prove to you that you are overpaying your taxes by thousands? Would you be willing to spend 2 minutes a day and no out-of-pocket expense to recover that money, those $1,000? Or multi-thousands, actually. You probably say yes, but are you sure? And you're probably sure because it's a stupid question, right? Who in their right mind would not trade almost zero time and no new cost for thousands of dollars a year? And it's probably an easy thing. And we're going to be talking about how to put thousands in free government funding for your business that you never have to pay back. And I'll promise you in the next 30 minutes, I'm going to give you a tax education that is legal, moral, and ethical, and you will have a clear-cut choice to get money from or pay money to the government. That's why my program is entitled How to Turn Income Tax into really non-taxable income. And not knowing, by the way, using the simple facts that I'm going to be giving you and I'm going to share with you today could quite literally cost you a fortune. And I will present all the facts so you can make an educated choice about your taxes. I absolutely guarantee it's going to be an easy choice. You know, you can either pay what you owe or pay much more. I mean, it comes down to being that simple. All right, a little background about me. Now, I'm going to be covering a couple things that I think is really going to shock you. And I've been teaching for over 30 years. And I want to give you a brief background so you'll realize why I'm qualified to discuss these things. First of all, I'm a CPA, as Scott mentioned. I'm a tax attorney. I am a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me the head rodent. I am president of my lecturing organization. I've been lecturing now for over a quarter of a century. Boy, that's a long time, isn't it? It's hard to believe I've been doing this long. I'm a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author of a book called Lower Your Taxes Big Time, and I have a brand new book. It's probably the best book I have written. It's garnering tremendous reviews, called Achieve Financial Freedom Big Time. And I highly recommend you get that. It's called Achieve Financial Freedom Big Time. And I've been a guest expert on Fox, CNN, CBS, and CNBC. And I'm not saying this to you to impress you. I just want you to know that I'm going to say some surprising things and that I really know what I'm talking about. Now, the first little bit of surprise is the fact that you've probably heard Susie Orman, and Susie Orman's very, very famous for telling people get out of debt, and debt's the #1 expense, and she even has a whole show on this. Believe it or not, as famous as Susie Orman is, she's wrong. The #1 expense is taxes. It exceeds, for most people, what you pay for food, housing, transportation, and clothing combined. This is particularly true with the new tax relief law. Believe me, that I can assure you that that's a misname. There's not a lot of relief. There are some deductions they give you, but by and large, more people will pay higher taxes. Not just the very rich. Yes, people make over $200,000 will be especially hit, but everyone will be hit, as you will learn today. You know, if you can fund your retirement with tax savings, I think you'll agree you can cure your retirement woes. And here's an interesting statistic that was done by Harvard, actually. It was a study. They wanted to know what percentage of people at age 66, which is the normal retirement age for Social Security, by the way, that's the full retirement age, what percentage of people at age 66 can retire with the same standard of living they had before retirement? The answer, as I said, I'll be covering some shocking things. The answer is unbelievable. It's 4%. 4% of everybody on this line, 4% of everybody in the country can retire with the same standard of living they had before retirement. Now, what does that mean? 96% of the people have to either continue working, live on some form of charity, or reduce their standard of living. Now, but one good thing is when you get money back with taxes, if you can save money in taxes, we can cure that retirement woe. How would you like to be for sure in that top 4%? Because I promise I'll get you there. You know, I'm going to say something really funny. The government is the biggest bookie in North America. It's true, because they're betting on you big time to succeed. Because, and you might wonder, well, why does the government pass good tax laws for small business that's not as much available for employees? And the answer is very simple. 3 answers: jobs, jobs, and jobs. Small business generates over 70% of the job growth in North America. Think about it. Apple Computer. You think Apple Computer started with 100,000 employees? Heck no. It started out of Steve Jobs or Steve Wozniak's garage. You think Microsoft started with 100,000 people? No. It started out of very small with Bill Gates. When he got some funding, he opened up a little bit of an office, and he expanded geometrically, obviously. Now, what's interesting is that we have 2 tax systems in this country. When I say that, most people say, oh, sure, Sandy, one for the poor and one for the rich. And that's not quite right. There's one to make you poor, and there's one to make you rich. The one to make you poor are the ones designed for employees, because they are taxed on $1. The one to make you rich are the self-employed people who know what they're doing. That's why I say it is a choice. You can pay your legal amount that you owe, or you can pay much more. The key is you got to know what you're doing, because the government creates great tax laws for small business, and they generate deductions and generate cash that you never have to pay back. And that's what's so absolutely fantastic about that. Now, to give you an idea, here's a Joe. And Joe has the following expenses: cell phone, mortgage, rent, car expenses, restaurants, entertainment, medical, and a lot of other expenses. If he's an employee, he can't deduct any of this. But by being in business, now you get a partial deduction for these things. You know, let's take an example. Let's say your yearly tax bill is $5,000 per year. Would you rather redirect, and I call this redirected taxes, would you rather redirect a portion of that $5,000 to help fund your business and possibly earn you years of future income? You know, either way, you're going to spend the same $5,000 in taxes. It's just a matter, or $5,000 one way or another. It's just a matter of what you get back in return, isn't it? So what do you think is a wiser choice for you in the future? Do you think this could be one of the reasons millions of money-smart people have businesses and are learning what they need to do to reduce the taxes in their business? Now, here's another interesting question that I want to ask you. Do you have a cash rebate card? What does your rebate card give you? Points? What else does it give you? 1%, 2%, 5% cash back? What if you had a cash rebate card that gave you a minimum of 20 to 50% cash back on almost everything you buy and everything you do? And the answer is you already have that, and that's your business card, because you get huge cash back on all expenses that are justified as a business expense. And that's an important point. When you get a deduction, let's say you get a deduction for $10,000, that's not cash. That translates into somewhere between a $2,000 to $5,000 cash back on that $10,000. That's what that means, and that's what happens when you get a deduction. Now, one other question that I always ask people at my seminars, and I ask, where does your money go? How much do you spend on taxes? How much do you spend on entertainment and so on? And it's amazing how many people don't know the answer. Here's a little chart that was prepared by one of the larger financial firms in the country. It shows that the average American pays 20% of what they make every month in debt payments. Now, debt includes all debt, though: mortgage debt, education loans, car loans, personal loans, everything. In addition, there's a day called Taxpayer Freedom Day, which is the day that you have to work to pay off their federal, state, and Social Security taxes. You know what day that is? Somebody at one of my seminars thought it was December 28th. It's actually, if you go on the web, it's actually approximately April 19th. And that varies depending on the state you're in and your income you're making. But if you go from January to April 19th, which is the average American, that means roughly 33% of what you make for the average person goes out in taxes. And it could be, by the way, as I said, as high as almost 50%, especially under the new taxpayer relief law. Well, if 33% goes out in taxes, 20% goes out in debt, and notice taxes does exceed the debt on the average. That's why Susie Orman's wrong. That leaves 47% for everything else. Everything else includes things for retirement for you and your family, education for your kids, medical, dental, emergencies, repairs, food, clothing. And if you wonder why people can't get ahead in this country, why we can't save money, here is the reason. Because over half their money is committed money between taxes and debt. And here's another really interesting question. Who are the biggest tax cheats in North America? Do you know? Well, if I tell you, you're going to be very surprised. Believe it or not, the biggest tax cheats in the United States, actually in Canada too, are the business owners themselves. Because it's a fact that business owners cheat themselves out of over $100 billion, that's with a B, billion dollars in legal tax deductions. You might wonder why. Well, the answer is very simple. Because they don't know how simple, fast, and painless maximizing their legal business deductions can be. I mean, literally, in 2 minutes a day, will end cheating yourself out of thousands of dollars a year in total tax deductions. And I'm not exaggerating there, by the way. Here's another interesting statistic. In fact, small business owners overpay their taxes, to be precise, by over $150 billion, to be precise, a year. And based on the surveys that I do with many of my seminars, I believe that over 95% of those people didn't even know they overpay, didn't think they overpaid. Now, why is this? Well, there's a couple of cash drain myths that we're going to be talking about. One of the cash drain myths involves, well, let's put it on right now. And that is only 7 words long. And those 7 words are, my accountant takes care of my taxes. If you learn anything, learn this. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go into a doctor's office and get one of these Roto-Rooter jobs? Another big myth. My mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. Now, by the way, Jaguars are interesting. They were the only cars in the world that had more vertical mileage than horizontal. I'll let you think about that. You know, I had somebody come up to my seminar. Some of you may have heard me. I was doing these big mega seminars with Tony Robbins and General Schwarzkopf when he was alive and a bunch of others. And I had some people come up to me and say, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. I get a refund. I've had several people say this to me to the point where it actually bothered me. They didn't realize they were getting back their own money. So what I did is I actually did an analysis to show how much you're actually spending in taxes, even though you get a refund. You know, what's interesting about those refunds is that they're geared, withholding and estimated taxes are geared to paying more than you owe, so that when you get a refund, you feel good. But in point of fact, you're not getting all your money back. And here's a very good example. Someone who makes, a single individual who makes $50,000 a year pays $12,917 in taxes. His withholding is $14,485, so he's getting a refund. But he's still paying $12,917 in taxes. Everybody see that? He's actually paying 25.8% under the new Taxpayer Relief Act in total taxes, federal, state, and Social Security. Someone who makes $100,000 a year is paying 32.4% of their income in taxes, and someone who makes $250,000 a year is paying 37.7% of their income in taxes. And by the way, as part of the Taxpayer Relief Act, number one, Social Security is going up. It's from 13.3%, which is what it was in 2012. It is now 15.3%, and it's on 113,700 instead of on 110,100. So you're paying more. Most people are going to pay more in Social Security. In addition to tax rate hikes that are going up as a result of Obamacare as well as the new tax law, you also are going to have income, your itemized deductions and exemptions start getting phased out as you make over a certain income. For married people, that phase-out rate starts at $300,000. For single, it starts at $150,000. And it actually starts phasing out your itemized deductions and your exemptions. So not only do you have higher rates, not only do you pay higher Social Security, but for people making over $150,000 single or $300,000 married, they start losing some of their itemized deductions and exemptions. That's why I'm saying, even though you get a refund, this is how much you're paying. Another question, what if I have a home-based business? How does that differ in tax benefits between a brick-and-mortar business or a Fortune 500 company that can fringe benefits that they can provide versus a home-based business? Answer, none. you get the same tax benefits as a small business or as a home-based business that a Fortune 500 company can apply to their employees. Same benefits. Another question I get, what's the difference if I work my business full-time or part-time? Answer, none. You get the exact same benefits. Now, here's another question. What if I'm not making any money yet? This is a big issue that a lot of people are not aware of. Let's say I started my business a year ago and I'm not making money, or I started 2 years ago and I'm not making money. Don't I have to have a profit? How does that work? The rule is that if you're not making money, the government doesn't care if you're making money, believe it or not. All they care about is that you run your business like a business and not like a hobby. Now, what does that mean? That means good business people have tax trackers. They have good tax organizers. Hobbies do not. Business people go to seminars like this, and they document what they learned. Hobbies do not. Business people generate financial statements. So that if they're not making money, they meet with their accountant and see where they can cut back. Hobbies do not. Business people consult with experts if they're not making money to figure out, like experts like Scott and others, to figure out what they need to do to make money and turn their business around. Hobbies do not. As long as you run your business like a business and not like a hobby, you get tremendous subsidies from the government. And here are the subsidies. Let's say your business generates a loss in your business. Remember I said the government subsidizes you in your business. Here's what they do. If that loss exceeds your income for the year, you can carry back all, first of all, you can use all losses against any form of income you have. Unless you're a C corporation, you can use that against any form of income you have. Interest, dividends, wages, rents, pensions, anything. And even with a C corporation, you can use it against your future earnings in the C corporation. If the loss exceeds your income for the year, if you're self-employed or a partnership or an LLC, you can carry back all business losses 2 years and get a refund from the federal and state government in many cases for the last 2 years of taxes that you pay. You actually get a check. Or you can carry forward all business losses up to 20 years and offset the next 20 years of earnings. So you never lose a properly documented business deduction. And a lot of people are not aware of this. Now, here's another question that I ask people. Would you rather have a $17,000 raise or for each year for the next 10 years, or save $10,000 in total taxes each year for the next 10 years? Which would you take? Well, you probably know if this is a tax program, so you probably pick the taxes. But you're right, because by the time you get that $17,000 and pay federal tax, state tax, Social Security, Medicare, capital gains, you're left with less than $10,000. I will tell you that we're going to show you how to dramatically and drastically increase your deductions in literally a few minutes a day. Now, here's another interesting point. How would you like to be able to buy gas for 11 cents a gallon, or the equivalent of 11 cents a gallon? Would you like that? I bet you're paying, what, $3.30, $3.50? Let me show you how that works with cars. There are several ways to writing off car expenses and vehicle expenses. One is the actual method, where you take your gas, oil, repairs, insurance, wash, wax, depreciation, and the other is the IRS method. And the IRS method is in lieu of most of that, and it's usually not quite as good as the actual. Now, the IRS gives you, in 2013, these are 2013 numbers, by the way. Everything is updated for the American Taxpayer Relief Law. It's updated for Obamacare. Everything has been updated. In 2013, you are going to be getting 56.5 cents a mile for every mile you drive for business. 24 cents a mile for medical and moving. Every time you go to the doctor, every time you go to the dentist, you should be claiming 24 cents a mile. I bet you're not doing that. You move out of state, move to a different city, 24 cents a mile. And here's something that Americans are missing tremendously, and I don't know why. You could also claim 14 cents a mile for charitable expenses. I met someone who is on his church choir. He should be claiming 14 cents a mile round trip every time he goes into practice. Or in my neighborhood, we have a lot of moms driving their daughters for Girl Scout cookies. They all come to my house. They must know I like Samoas. Those moms should be claiming 14 cents a mile. This is a very overlooked deduction. Now, in Canada, I don't know if there's any Canadians, on the first 5,000 kilometers, you get 53 cents a kilometer for business, and 5,000 over that, you get 47 cents a kilometer. So let's take an example of how this works. Let's say you drive 20 miles, and I'm going to show you how you get the equivalent of 11 cents a gallon, okay? Let's say you drive normally 20 miles a day for business. At the IRS's 56.5 cents a mile, which, by the way, is more conservative than the actual method, you're getting $11.30 in deduction. Now, this is not cash. A deduction is not cash. If you're in the 30% tax bracket, that results in a $3.39 physical cash savings in your pocket by properly documenting your car. But if you're paying $3.50 a gallon, and we'll assume you get 20 miles to the gallon, you're buying gas for essentially 11 cents a gallon because you're paying $3.50. You're getting in deductions in cash savings $3.39. It's only costing you 11 cents, and that is what being able to deduct your car correctly does for you. Now, there's something else I want to give you that a lot of people miss. In the new taxpayer relief law, they extended something where you can take a deduction for either your income tax, if you have a state with an income tax, or if you don't have a state with an income tax, you can take a sales tax deduction, where you actually can get a chart, you can deduct sales tax. But here's something that the government didn't tell you that I bet you didn't know. Not only, even if you use the IRS method, you can still deduct sales tax. Even if you're deducting the income tax, you can still deduct sales tax to the extent you use your car for business. You can also deduct interest on car loans to the extent you use your car for business. So if you use your car 80% for business, 80% of the sales tax is a business deduction. 80% of the interest is a business deduction. And that's in addition to deducting either the normal sales tax or the income tax, depending on what state you're in. That's all in addition. So if you didn't do this, and there's a lot of accountants, by the way, who did not know that if you use the IRS method, they didn't know that you can take a deduction for the sales tax and interest to the extent the car was used for business. If you didn't know this, you can file amended tax returns for up to 3 years that you've been in business and actually get back money. I know someone who just got back almost $6,000 on this. So I'll repeat it again. The sales tax and the interest is deductible to the extent you use your car for business, regardless of the method you are using, regardless of whether it's the IRS or the actual method. Okay? And by the way, I want to emphasize, I'm giving you a 30,000-foot overview of what's in TaxBot. TaxBot has a lot of educational information with videos and blogs and so on. So I'm going pretty quickly. Here's another tip. All of us have personal trips. You go to take your kids to football games, tutoring, things like that, that's personal. You want to see your mom, that's normally personal. So what you do is you ask yourself, do you have a client or a prospect who lives near your mom? If you do, by doing that and seeing that client or prospect, now a substantial part of that trip can be deductible. And by the way, your mom doesn't have to live where you are. Let's say your mom happens to live in Hawaii. By putting ads in the paper to try and get potential clients or prospects, now that trip to Hawaii can be deductible if you do it right. Here's another thing in the tax law, in both U.S. and Canada, in fact. You can deduct 50% of your meals and 50% of your entertainment for anyone who's a potential client in your business. Now, my question to you is, regardless of your business, who are your potential clients? And my answer is, are your best friends prospects in your business? Can they give you referrals? Can they be customers? Sure. How about your adult family members? Sure. How about your next door neighbor? Sure. So my point is, almost everyone is a prospect, and therefore almost every meal you have with someone is deductible. And if you are not writing off almost all your meals, you are losing thousands. You know, I say this again, and I said it at the very beginning. You can pay the legal amount of taxes that you owe, or you can pay much more. Which would you rather do? You know, you have a choice, and the more knowledge you have, the more you'll only have to pay the legal amounts. Now, there's something else I want you to write down that I'll bet your accountant didn't tell you. It's called associated entertainment, and that's what it says in the Internal Revenue Code. If you have a pen and paper, write this down. It's called associated entertainment, and then I want you to put an equal sign, and I want you to write down the word fun. Fun. So we don't necessarily need different tax laws. We just need better explanations. This is where you're going to a movie. This is where you're going to a play. This is where you're going to a ballet. This is where you're playing golf. You know, golf's an expensive sport. So if you could write it off, I mean, you'll have twice as much fun, right? In the U.S., you can deduct up to 50% of your fun as well as 50% of your friend's fun if you talk business, and this is, by the way, IRS talking, not Sandy Botkin talking, if you talk business within the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I'm driving to a football game with Scott, and I have an intent to talk business with him in the car, and then we drive to the game. Is that talking business within the same 24-hour day? Yes. And if I pay for his football, I can deduct, or even if we split the bill, I can deduct my share, 50% of the football tickets. Let's say we talk business over lunch, And then I say, Scott, it's such a beautiful day. What do you say we go play golf? And it is, actually, it's a beautiful day here on the East Coast. And Scott says, well, you show me how to play, I'll go with you. He might have a 300 handicap, but he's going. Is that talking business within the same day? In other words, I talk business over lunch, and then we play golf. Yes. The problem is this. How do you prove you're talking business within the same day? Who has the burden of proof, first of all? Is the government, or do we do? We do. And how do we do it? From our tax tracker or a tax organizer. Is everybody getting the drift here? Your tax tracker is your audit insurance against IRS. Knowledge is the premium. Together, you will never have to worry about an audit again, I promise. And especially with these higher rates under the taxpayer relief law, you know, having extra deductions really comes in handy and help minimize those higher rates. Home office. You know, you probably heard having a home office is going to trigger an audit. I bet you heard that. And you probably heard it isn't worth it. I bet you heard that too. I'm here to tell you that if you are eligible for a home office, which I think many of you can be, you are crazy if you don't claim a home office deduction. The benefits are enormous. Now, I don't know if you realize this, but the government liberalized the home office rules in 1999 and made it a lot easier. Self-employed people and LLCs can pretty much easily claim a home office so they know what they're doing. Corporations, if you have a regular corporation, you can also do it, but in a different way. With a corporation, you can't just claim a home office. What you do is you take it the way a normal person would take it, if you meet the rules, but you have your corporation reimburse you for the home office expenses. So essentially, your accountant will compute the home office deduction the way he would for a self-employed individual, and you would get a reimbursement. You wouldn't claim that deduction. You would get a reimbursement from the corporation. There are some traps if you try to claim a home office, but if you get a reimbursement, you avoid all these traps. And that's what a regular corporation needs to do if they want to be able to use the home office deduction. And by the way, that reimbursement would be effectively tax-free. You're just going to show them what the home office deduction would have been, and you would get that reimbursement tax-free, which is nice. But, of course, the corporation gets the deduction, so everybody wins except the government. Now, let's talk about a home office, a little bit how it works. Let's assume you have this house and use one bedroom for business. So we're going to assume that 1/8 of the house, 1/8 of the square footage is for business. And you may have more or less. I'm just picking a number here. Now, what does that mean? 1/8 of the utilities become deductible now. Before, they weren't deductible at all. 1/8 of the interest becomes business interest, which will help reduce your Social Security and Medicare. 1/8 of the taxes, and this is business. This is not affected by the phase-outs of itemized deductions, by the way. 1/8 of the taxes become deductible. 1/8 of the house can be depreciated. A lot of times people ask me, well, Sandy, I'm renting a house, or I'm renting an apartment. Can I deduct the rent? If you claim a home office and you're eligible, yes. In this example, 1/8 of the rent would be deductible. 1/8 of the maid service, 1/8 of the alarm service, 1/8 of the repairs, insurance. To give you an idea of how this works, let me give you a good illustration on how you do this. You know, when we're in business, we have a lot of different deductions. Let's assume you're paying for you have your cell phone. And by the way, cell phones, especially if you have a corporation, you do not have to keep records on it, and you can write off your cell phone bill and your cell phone, by the way. But if you're self-employed, you have to keep some kind of records as to business use. Let's say that I have a cell phone bill that I'm paying $120 a month. And frankly, I think that's low. I'm paying more than that, actually. And I use it 90% for business. Well, 90% of that $120 is $108 in deductions. Now, a deduction is not cash. Cash is, a deduction depends on your tax bracket. So if you are in the 33% tax bracket, that translates into $35.64 in cash in your pocket every month. Rent or mortgage, we're going to assume you pay $2,000 a month in rent. 20% of that house is used as an office, therefore $400 is the deduction. And in your tax, in a 33% tax bracket, that's $132 of cash saved. With utilities, again, we'll assume you pay $400 a month in total utilities, electric, gas, so on. 20% of that is used for business. That's $80 in deductions. That translates to $26.40 a month. We're going to assume you spend $200 on meals and $200 on entertainment a month. And by the way, I've had people tell me I've spent that in one Saturday night. I'm assuming a month. These are conservative numbers. In the United States, you get a 50% deduction on entertainment and meals. So out of the $400, you can deduct $200 of that. If you're in the 33% tax bracket, that's another $66 of deductions. Mileage, we're going to assume you drive about 57 cents a mile, a business mile. We're going to assume you drive 200 miles a month for business. That's only 7 miles a day, folks. That's $113 in deductions, which translates to $37.29. My point is these 5 or 6 deductions are generating $297.33 a month in your pockets. Multiply that by 12, that's $3,568 a year, and that's only 5 deductions, folks. And if you're not taking this in full, if you're not doing any of these things, you are overpaying. You're not paying your legal share. You're paying more. And this is just the tip of the iceberg. I mean, for example, I know in TaxBot we discussed how to write off your car expense and get a lot more, and we're talking thousands, including business mileage. How to write off the equivalent, this is one of my favorite things, of your child's education and weddings. How would you like to write off the equivalent of your kid's education, 4-year education? I did. You'll find out why. How to deduct 100% of your medical expenses, not as a threshold, no threshold, 100% of your medical as a business expense. How would you like that? Bet your accountant never told you that one. How to deduct your fun and entertainment, including season tickets, and bulletproof yourself from even the smartest IRS auditor. How to double deduct your business equipment. Yes, you heard me correctly. How would you like to write off the equipment you use in business twice? How to turn your vacations into a tax-deductible event. You can do that almost anywhere in the world if you know what you're doing. How to create a retirement plan that beats any government plan, and a lot more. Now, how do I stay compliant? Well, the answer is very simple. 1, you need to start keeping meticulous records. I can't emphasize that enough. And you need to learn more about tax deductions. The more you know, the less you owe. It's always the case. Now, remember we talked about that tax rebate card where you're getting redirected taxable income? All these rebate cards have they have all these rules. They're rules of conduct. Well, many of them have pages. Here we only have 3 rules of conduct. The first rule of conduct is you've got to run your business like a business, not like a hobby. And I got into what that is a little bit. That means you just try to make money. You have a good tax tracker. You try, if you have financial statements run for your business. If you're not making money, you meet with your accountant to see what you can cut back. You go to training. You're trying to make money. You work your business regularly, and that usually means at least an hour a day, 4 to 5 days a week. It's much more important to work your business regularly than, say, once every 2 weeks for 12 hours. And you document your activities correctly to show IRS that you're in pursuit of a profit. The key is you want to track your expenses according to IRS standards for your business. And by the way, if you don't have good records, then you're in trouble if you get an audit and by not maximizing your savings. And just by the way, IRS has announced that they're hiring 16,000 new IRS agents this year. Sound scary? Well, the good news is I'll show you how to bulletproof your records so you won't have to ever worry about that again. How's that? Now, also, you need to document your deductions within 24 hours. And here's an ideal documented tax organizer that I used to provide for people for years. The advantage of this is that it avoids procrastination. All the tax questions are right in front of people every day, 365 days a year. And I strongly urge you to get a tax organizer like this. So what are the questions? For entertainment, you have to write down what I call the 5 W's and an H. Who? What's their name? In this example is Nick and Carol Hillman. What was the entertainment? In this case was meals. Where? I went to Palm Restaurant. We then went to the Ford's Theater to have fun. When? The date happened to be on the diary. It just didn't show up in the photograph, but it's here. Why? I asked for referral. They gave me the name actually of Johnson. And finally, how much? $200. Who, what, when, where, why, how much. If you do this, you will never have to worry about an IRS audit again. And by the way, who has the burden of proof of doing these things? Do you or the government? And the answer is we do. How? From our tax organizer and tax tracker. And by the way, I have people who call me up all the time when I go on the radio and television, and I have people asking me, Sandy, how do you mean to tell me that the government is going to believe everything I say in my tax organizer and tax tracker? Yep, they will. Your tax tracker is your audit insurance against IRS. Knowledge is the premium. Together, you will never have to worry about an audit again. Also, lost and faded receipts are a huge problem. Here's an actual receipt. A lot of these receipts now are on thermally treated paper. This paper is about 1.5 years old. Look at this. I can't even read it. And if you can't read it, then you're not getting no deductions for this. And a lot of people think credit cards alone will work. Well, think again, because you need more information than the credit card provides. That's the bottom line. So credit cards alone won't work. See, in tax law, you are guilty until you prove your innocence. You have the burden of proof of proving that all deductions were business-related and that you followed the rules. It's that simple. Now, here's an important question that I want to ask you. How would you like to have access to the exact system used by thousands of taxpayers, high-income taxpayers, to save millions on their taxes? Would you like that? Not to mention, avoid the problem, as I mentioned, of only paying what you legally owe and not much more. We have, would you like to do it today? Let me introduce you to what we call the Business Survival Tax Package, which has helped just tens of thousands, I think hundreds of thousands of people now. We have a program that for entrepreneurs who want to make their lives a lot less taxing. It includes our tax strategies for business professionals, which has over 27 ways to write off your fund, your movies, your plays, how to write off the equivalent of your kid's education, how to maximize your car deductions, how to write off 2 cars, not 1 car, what you need to do to absolutely bulletproof a home office deduction and to claim it. What do you do if you get audited? How do you reduce your chance of audit? Martha Stewart would never have gone to court had she listened to this, and much, much more. It is a video, not just audio. We have audio and video, in fact. We have both. We also have, but this gives you the knowledge. This gives you the information, and a lot more, by the way, how to make any vacation in the world tax deductible. But knowledge alone isn't alone. You have to have a good tax tracker or tax organizer. And we have 2 types. We have a tax organizer diary, sort of like the paper version that I showed you. And we have a new version that works on a smartphone, like an iPhone or a Droid or a tablet or a Droid tablet, that will keep the IRS off your back. How does that sound? And what do you do if you have tax questions? We have a program for unlimited tax consulting for a year where you can call them up, not just email them, call them, and they will support your tax questions. Tax planning for business professionals. It looks like this. It consists of 6 CDs, 11 hours of the best material that I present all over the country. It also includes information on what kind of entity you should be, how do you minimize the estimated taxes and put as much money in your pocket and not in the government's pocket, how to run your business like a business, what kind of pension to set up, educational deductions, and much, much more. In addition, you'll learn how to potentially deduct most of your fun, movies and season tickets, your golf balls, your clubs, your lessons, your parties at home, any vacation anywhere in the world by combining it with business. How would you like to write off all the dry cleaning and laundry, even the cost of the clothing itself? Bet your accountant never told you that. How do you discover a secret as to why IRS doesn't require receipts under $75 per item? That's not per day. Learn how to potentially bulletproof your travel even from the toughest IRS scrutiny. Discover a little-known secret that's used by the super rich, like the Waltons, for example, and Bill Gates, to potentially deduct the equivalent of your kids' weddings and education, law school and medical school, and much, much more. This is available on, it says 8 hours, actually 11 hours, of audio CDs or video DVDs. And as a special bonus, it's accredited for 8 hours of CPA or continuing education for CPAs. Now, in addition, our tax organizer has 2 choices. We have a paper system that has all the tax questions that IRS requires right in front of you, 365 days a year, like who, what, when, where, why, how much, questions for travel, questions for automobile. Or we have a special program we put together called TaxBot. TaxBot works on the Apple tablet, Droid tablet, even works online. You instantly store receipts. You snap the photos of the receipt, answer simple questions, and bulletproof yourself against an audit. The records are absolutely in compliance with the IRS standards to ensure you are bulletproof. In fact, we even had a ruling that electronic documentation will work for them. There's a ruling on this, in fact. The way it works, let me show you how TaxBot works. You press Add Expense. I can do simple and easy. Complicated I can't do. I don't like complicated documentation, but I can do simple and easy, and that's the way it was designed. So for meals, when you press Add Expense, you'll get a whole list of categories, which are fully customizable, by the way. You'll see meals. You press meals. This is what will pop up. Immediately, all the questions for what, why, how much, where, when, and who are right there. All you do is type it in. In fact, the date is already typed in, and so is the meals, and you are now bulletproof. It also has an integrated scanner. So you would press attach receipts, you would take a picture of the receipt, save it, and everything is stored wirelessly in the web. So you'll never lose a receipt again. It also has an integrated mileage tracker with a GPS system, and this one's really cool. Watch this. This works for cars or trucks. You start your mileage tracking. You immediately see a screen like this. It'll keep track of where you're going, and the minute you get to your location, you press Stop Mileage Tracking. It'll automatically give you the beginning address. You don't type that in. It's automatic. Automatically give you the ending address. Automatically give you the day. If it's a round trip, it'll automatically do round trip, unless you want it for a different trip, and automatically give you the mileage. The only thing you put in is the reason, and you are now bulletproof. How's that? If that's not simple, I don't know what is. TaxBot also has tremendous storage capability. We have a special program that integrates with a credit card or a bank account. What that means is, let's say there are things you put in your checking account or a credit card statement that isn't in TaxBot. You didn't go through your phone. TaxBot will actually look at any one credit card or one bank account, you register it, and it will take a look at what you put in the account and what you put in TaxBot. If it's missing, it will send you a message saying how much these expenses are missing. Do you want to add this as business? How's that? So it even keeps track of that. It will eliminate paperwork and save you tons of time. It will give you a secure web portal in the cloud for all your documentation and expenses. You track it, we store it. The records will be stored with bank-level security according to IRS standards. You can edit the records. They are fully downloadable. In fact, you can even download the reports on a memory stick and give it to your accountant, and never have to worry about losing the information again. I want to mention something. TaxBot is kind of like a BMW. There's a lot more under the hood than what appears. For example, many companies tell you they store information. We store it in 3 different locations in several different cities. How's that? So your mileage, your expenses, and your records are all stored securely in a dynamic web portal that will integrate with any current appointment keeping or record keeping tools, and you can even do a budget if you want. It's that simple. Now, also with TaxBot, you get a tremendous amount of tax training. We have over 40 videos that we're adding. We're even adding more, in fact, 3 to 5 minute videos on all kinds of topics. For example, I have one topic on how to get in-state tuition for an out-of-state kid in almost any state university. Seriously. That's in TaxBot. We also have over 260 blogs on a wide variety of subjects.